So there are three types of traders that I want to focus on here today in the broad aggregate. One is a fundamental trader. Two is a systematic trader, what is called a systematic trader. And three, I'm going to call a method trader, who follows a method. So let's go through each of these individually and talk about the advantages and disadvantages of each. We'll start off with number one, the fundamental trader. Characteristics of a fundamental trader include focused on economic releases and trends. A fundamental trader is focused typically on the economic releases and trends. And to give you an idea of what that means, this is a look of just, 12 economic releases, there are more, that come out on a monthly basis for the United States. And this is the trends that you see from the graphical view of the most recent, or the last 12 or so events. It actually looks like more than 12, maybe, going back to November of 2010. It's almost 2 years of data here. So you can get an idea from a fundamental trader would look at this data and get an idea as far as what the economy is doing in the United States and make a judgment as far as maybe the U.S. dollar, what it should do. So before I get into what may or may not happen to the U.S. dollar, what a fundamental trader would look at is things like the employment report. Might look at the GDP, might look at inflation as represented by CPI, maybe PPI as well. ISM manufacturing index or purchasing managers index this shows a level of the manufacturing activity. Retail sales is what drives the U.S. economy. What is retail sales doing? Consumer confidence, perhaps a measure of future consumption. If consumers confident, may look to spend more. Things like the trade balance and current account, durable goods orders, those big ticket items that confident consumers might go out and purchase, or it may be a result of things like housing. Buying a house tends to increase durable goods purchases. Industrial production, again, and capacity utilization, measures of manufacturing activity. So that is a snapshot, or this is a snapshot of economic trends within the United States. And typically, if the economic trends are up, the currency of the country should appreciate, ceteris paribus, that's Latin for all things being equal. So if the United States employment situation is, we're adding jobs, the unemployment rate is coming down, not necessarily saying that's the case. Obviously, the Fed is concerned about that, but let's say that we're better off relative to other countries, or that we're seeing new home sales were a little bit worse than expected here today, but still near higher levels. Existing home sales last week pretty strong. So let's say the trends in the United States are pretty good, then that currency of the dollar should go higher. Now, what is true, however, in currency pairs is that a currency price is about two countries' economies. So focus should be on one country's strength or weakness versus another country's strength or weakness. So if it's not good enough from a fundamental standpoint or fundamentalist standpoint to just look at, or it should not be good enough to just look at what's going on in the United States. I often get people say, well, the Canadian or the oil inventories, I just got it just a second ago, oil inventories were down, so that should mean higher oil prices and should be good for the Canadian dollar. But it doesn't necessarily mean that the currency, the Canadian dollar, is going to go up. It may be something else that's going on. We'll talk about that in just a second. But the focus becomes is on the two currencies and what they're doing. And so instead of looking at it from the perspective of each individual country, like I looked at in the previous chart with the United States economic data, you might want to look at, a fundamentalist might want to look at the employment situation in each of the countries and make a judgment that, okay, employment in the Eurozone is moving higher, employment in the U.S. is trending to the downside, so the dollar should be stronger relative to the euro. That might be one interpretation of the what a fundamentalist might look at. Now, the problem is that you have to look at then GDP and look at all the different differences within the GDP and make a judgment of that. You might want to look at the inflation and look at the trends in inflation from one country to another. So there's a lot of fundamental releases and news out there, economic releases that go into determining the value of a currency. Samples of economic releases: GDP, unemployment, CPI, PPI, retail sales, durable goods, industrial production, ISM, consumer confidence, trade balance, building permits, existing home sales, new home sales, budget deficits, auto sales. All these go into this big cauldron, this witch's brew that you call fundamentals. And from that, a fundamentalist would try to make an interpretation of what the dollar should do versus the euro, what the dollar should do versus the pound sterling, what the dollar should do versus the Swiss franc or the Japanese yen, and make a judgment as far as that goes. So there's a lot of stuff, a lot of economic releases that make it very difficult for traders. Now, another thing that fundamental traders focus on, in addition to these economic releases, kind of compounding a problem of a lot, is the focus on events and implications of those events. So what kind of events are there? Well, there's central bank meetings, there's central banker comments, there's change in interest rate policy, there's analyst views, there's downgrades, upgrades of countries, and banks and stuff that go into the value of a currency. There's debt defaults, there's fiscal policy changes, there's elections, there's weather and other natural disasters, there's tragedies like September 11th, assassinations. These things that happen, they affect currency pairs. There's things like war. And all these events that aren't scheduled on your economic calendar, well, some of them are, like central bank meetings, but and we may know that a central bank comment may come out and stuff like that. But these add to the dilemma from a fundamentalist standpoint about what do you want to focus on. Now, add to that even a third characteristic of a fundamental trader, what they may look at to determine value of a currency pair, is things like intermarket influences. The price of oil versus the U.S. dollar and other currencies, the price of gold versus U.S. dollar and other currencies, stocks versus U.S. dollar, commodities versus the U.S. dollar and other currencies. What are their influences on the value of the dollar? And things those relationships or stories from those intermarket relationships, sometimes they work one way, and sometimes they work another way. The story, in other words, the story changes from time to time. So here's a chart of the dollar index, which is the white line, and the S&P index, which is the orange line. And so here we see the S&P moving up, and what's the dollar doing? It's going down. Well, here we see the dollar index moving up and the S&P moving up as well. So this relationship, which was counter here, is now the other way here. And at this point right here, we see the S&P moving up and the dollar moving lower. And what we've seen lately is that's what we've seen lately is this relationship. And so the story can change around, making it even more difficult for fundamentalists.